What is going up, guys? Welcome back to the best day trading and investing channel on YouTube. I'm your host, Carter, and before I get started into this video, you guys have to go subscribe to the channel. We are almost at 810 subscribers, and I am thankful for each and every one of you guys. We are slowly moving up to that $1,000 mark, and I'm telling you, once we get to that $1,000 mark, I am doing a big time giveaway here. I've done giveaways in the past, but this one's going to be big. Alright, I'm not going to tell you what it is yet, but subscribe to the channel. Alright, so we're going to be talking about the top patterns, or the top two patterns that I use. We're going to be pulling up just the top gainer on the day. We're going to be doing some pattern recognition and some overall support and resistance recognition. So looking at this stock here, guys, you guys can see that it has some resistance at, hold on, let me change the drawing tool real quick. This has some resistance here at 245. Now, I did have this drawn out during the day just because we had some sellers coming in, but realistically, the the resistance was in this range right here. So as you guys can see, all the way down here, we have some support. We can level that out. We have some support right here. Now, support is where stock tends to bounce going up, and resistance, it bounces going down. They're all reversal type plays. What acts as support and resistance lines are either price points. So that's what I'm labeling out. So from 245 to 241, there's some resistance. Then from 227, there's some support. So these are just price points. There's also moving average lines. Now, moving average lines are pretty much overall what they really are. They merge or the average out the closing prices of the past however long you have it set for. So as you guys look up here, this is the 9, this is the 20, 90, and then this one down here is the 200. So the 200 is the past 200 days closing prices averaged together, and this is just pretty much just an indicator that a lot of popular traders use. So it acts actually as a very strong support or resistant point, whatever way it's on, guys. All right. So let's jump into this video here. So as you guys can see, we have a nice resistance at 245 here. Now, when the stock opened, we had this huge sell-off. Now, as you guys can see, it hit this moving average line and bounced. Now, this bounce, I guarantee, was caused by this moving average line. Buyers coming into it. You guys can look at the volume bar. We had this huge push in volume. Now that volume caused a huge spike, had some trouble, had to retap the moving average lines, and then spiked up. But how could you get this play? Well, the first pattern that I would recommend learning is called a bull flag. Now the flag has two parts. It has the pull and it has the flag part. So right here on the very bottom, we got the pull going all the way up to the very tippity top. Perfect. Now we have the flag part. So all you gotta do is click and draw the flag part out. Now you can either leave it, or you can. Some people do. They do the bottoms as well, but that's really not that big of a deal, guys. So as you guys can see here, let's move this so you guys can see it. Let's make sure you guys can see it to begin with. Alright, so we are good. Alright, so as you guys can see, we have this the pull, now we have the flag part. Now the time to go long, or buy the stock, there's 2 points. Now you can either buy on the first candle to beat the previous high of the past red. So looking at this stock, and you always set your stop loss below the bottom wick of the first red candle. That's what I always do, just because you guys can see we had this huge dip down here, now we would have got stopped out. But if we would have stuck to our pattern for the first candle to beat the high, so this right here is the wick. We don't count that because this is just sellers selling the stock back down. So that's what we get here. So the first candle to beat the previous high of the red would be this one, but as you guys can see, we do not count this. So it would be this right here at 36 would be the ideal scenario right here. Now, if you guys missed that first move, that is okay. That's very, very common, guys. Most of you're going to get alerted in this point right here because this is going to be the first candle to make a high on the day, as you guys can see. Now, if you guys have your settings for pre-market, you want to get notified, but if you have it settings for the daily or just during the day, then you would get notified. So this stock had this huge price movement. Now what do? We draw out the pull. So we got to draw out the pull. Now you can literally do this right during the market hours. So now you have the flag out. We don't count this. So then we go all the way down. So we want the best entry would be the first green candle to make a high over the past red. So first candle to make a high over the past red would be this one, over the high, over this high right here. Nope, not this one. Not this one. Now this one we're kind of counting as just that upward trend, so the flag part was really out here. But all right, I'm getting mixed up here, but it's all right. You guys will get it. So the first entry here on the stock that you could have also got in is at 243. Now, you might be saying, Carter, we don't count this wick. Well, that is okay. Now, this stock right here, we formed a doji. This is a reversal sign candle. So this is just buyers and sellers pretty much fighting over the stock here. So the next ideal point would have been over this at the break of that 245 mark. Now, once it broke over this 245 mark, we are going long. So pretty much, guys, these bull flags, they just have the pulls and then the flag out point. This last one here is by far the best. So we have the flag, then we have the little pull or the little flag part. So we have the pull, the flag, and then we have the first candle to beat the high of the previous red. So right here at 250, getting in for the break of 250, we have this nice little squeeze all the way back up to 265. We're covering profits all along the way, guys. So these are just bull flags. Now, I do not trade after 3. So if there's 1, 2, 3, and let's say there's 4, 5, 6, I am not taking trades on anything over the third one, just because that is when things get more risky. Because as you guys see, your risk is gradually getting, if you don't know what you're doing, it's getting greater. So here's your risk. The stock could easily squeeze back down. Your risk squeeze back down. But if you have your stops right below moving average line, because you guys can see right after the second one, it is using this 9 moving average line as support. So setting your stops right below it would be the smartest thing you can do. So right after here, boom, you're out of the trade, no problem. Even though, yeah, it might continue to push up. So let's see what the stock did during the day. I mean, see if you would have done it here. So we have this little pull, the flag part, you would have got stopped out. It's just after the third one, the follow through is not as good. So let's just do a quick little breakdown on the bull flag, pattern here. So this is when a stock, it gaps up a little bit with these huge wicks and these huge candles, and then it kind of consolidates. Now this consolidation is pretty much buyers and sellers figuring out where the stock's going. Now if we have a variety of other things, it's just not pattern recognition, it's increasing in volume, it's increasing in a whole bunch of other factors have to go into it before you make the trade. There's a catalyst, there's earnings, there's news, there's all this other factors, guys. So all you gotta do is you most likely will miss the first one. I can almost guarantee it. But that's why the second one is so clean. You easily can see we have this huge pull, and we have this flag out. Now this would be the time to go long on the stock, and you would be in the green, setting your stops right below this moving average line. Now the next one here is a moving average bounce. Now as you guys can see, moving average bounces are pretty consistent. If you look close, you guys can see it comes in contact with the 200 and bounces. Now realistically guys, this is when a time where you guys can scalp trade. You're not going to be buying 3, 4, 5,000 shares in this position. You're going to be buying 1,000 to anywhere from 500 to 1,000, trying to get up on the day 100 bucks, 150, just so you guys are in green, because you guys can see once it hit this 200 moving average line, it bounces. I do not trade this strategy on the 9 or the 20, only on the 200 and the 90, because those have the best follow through, because that's what more traders use. So we have this huge push up, comes in contact with this 9 moving average line. So this one is pretty much playing out 2 factors. It has this pattern right here, the bull flag. Then it has this nice little moving average bounce line. Boom, you're in contact. Perfect. So the next one here, it's above all of those. Comes in contact. Boom, quick scalp trade. Now you just pretty much get in on the moving average line, setting your stops very, very tight. So maybe at 243. So you're risking pretty much 3 cents to make maybe 5 on a good day, guys. But those are the top 2 strategies, honestly, that I use on the daily. I do use the gap and go, but I made a previous video talking about that, so I wanted to explain the bull flag. So we have the pull, flag part, bull, flag part, bull, flag part, and then we have you do not trade over 3, and the other one's kind of easy. But that is it though. Before I would highly recommend people starting to use real money is always to simulate paper trade. Get your feet wet, guys. So that is it though. I hope you guys enjoyed this episode here. Remember to like the video, subscribe if you're new. Remember to always stay happy, stay positive, and I hope you guys have a great rest of your weekend.